Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, March 23rd, 2021. In this video, I want to cover a few commodities, not any particular group. In other words, some of these will be ag commodities. I'll hit on natural gas, crude oil. Far from a comprehensive video like I often do, covering just about all the commodities that I follow and track and trade. But this will again have a few that stand out here, some potential trading ops. And if I don't get to the ETFs or ETNs that track these commodities, I'm going to go over the charts of the futures. If I don't get to that, any that stand out, I'll try to follow up with some charts either in the comment section below this post or in a follow-up post with some chart images. All right, this one, again, I'm not going through any particular order. This is not my favorite, but I wanted to point this one out. This is LE, and that's live cattle futures. So what you're looking at here is if I don't mention it, by the way, most of these are going to be 60-minute or 120-minute charts. In other words, 2-hour candles or 60-minute candles. This one has roughly 6 months of trading history there. And what you can see is we put in a divergent high right here that led to this correction. That correction has taken us back to this 118-ish support level. You can see some reactions along that area there, and we do have positive divergence. So this one you could make a case to step in long. Not my favorite. I like actually, this is cattle. I like hogs better, but on the short side, and that's unusual. Sometimes they move together, and sometimes they don't. So again, this is LE cattle in correction mode, but then let me show you the hogs. Okay, this is HE, lean hogs, and you can see actually while cattle's been correcting, hogs have been going up, so they can move opposite one another. Of course, they're different commodities, but times they move together and times they don't. So what you have here is a very well-defined uptrend line. This one I like better for a short trade right now. Again, you can make an objective case to go long that one. You're spreading your bets. I always like the more things you can trade and keep track of. You don't want to bite off more than you can chew, but diversification helps. Maybe you're right on one trade, wrong on the other. Watches out. It's just, especially day by day, it helps minimize or mitigate the swings in your portfolio when you have multiple positions and you're diversified among different sectors, different asset classes, those kind of things. All right, so this is again HE, and it has, we're looking at a 2-hour chart. And there it is. So there's an impulsive breakdown below the trend line right there in a back test right now. So that offers an objective short entry. You can keep stops very tight, or you could put a stop above that recent high in case we go on for another back test. It's not that much. Minimum target right now, and that's what I'm looking at. Let's just say my sold target's about 94.40 right there. I think that's a good level because most of these commodities are in primary uptrends. As you guys probably know, if you've been following me for a while, I've been very bullish and mostly long commodities for about the last year now, a good year. So took profits on a lot of the ag commodities about a month or so ago. Just because they were getting a little frothy, but again, I think there's time to re-enter some of these here. And again, I'll trade them long, short. But point being, what I'm trying to get at is if you're in a primary uptrend, a short trade is a counter trend trade, so I'm not looking for a major top or anything like that. Just a pullback before the next leg up. And again, if you look at, keep stops relatively tight, the downside potential. Should this one reverse here on the back test, you have about 6%, which is a decent trade. If you trade futures, I don't have to tell you that because futures are very leveraged. So a 6% trade on a futures contract is pretty healthy. And then for the ETN on this, the closest thing, I don't believe there's a pure play for either cattle or hogs. You have COW, which has both of those. So they're offsetting right now, at least from what I showed you. It was bullish on one, bearish on the other. Here's lumber LB, and lumber is at resistance. It's just a hair above, but I believe this will be a false breakout, aka bull trap, and you could take a shot at it because we're right above. You keep it relatively tight. If it goes much more, the breakout's valid. So I think it's going to fall back down. We have divergence that's been building. We had divergence at this high. We broke the trend line. We had a correction. This trend line I'm referring to. We came back up to that high, failed again. We're there again. And if we fail, I think we come down at least to that 779-ish. We'll call it 780 level, and quite possibly down here to this next target, potential target around 700. There's the divergence I'm talking about. You can see this divergence just continues to build on LB. That's lumber futures. That would also jive with a correction in the stock market. Lumber's held up. I've been eyeing this one for a while. It's gone parabolic. When I've showed you in the last couple months several times the longer term chart, and it's been parabolic. That has to do with the recovery in the stock market, and plus a strong housing market with the Fed taking rates down to zero. Now, here's my theory: Treasury rates have skyrocketed. The long term rates, the ones that affect mortgages, have really been moving up because, as I've often said, the Fed does not control or directly control the long end of the yield curve. They do not. They don't set the 30-year bond rate. They don't set the 10-year rate. The markets, the financial markets, set that rate depending on buyers and sellers. The Fed can only set the rate for the federal funds rate in the discount window. That's it. So they've kept short-term rates down, and they can't control. And Powell's, I don't know how concerned he is, but he's got to be somewhat concerned about that. Runaway big rally in long-term rates. And again, where I'm going is that's got to definitely have an impact on the housing markets. When mortgage rates go up, you can buy less house with the same amount of money. It's going to eventually take its toll in the housing market. So either way, there's based on technicals. That's mainly what I do here is technical analysis. But if I have a thought fundamentally, especially if it lines with the trade, which I'm talking about here, the rising interest rates is a fundamental bearish event for the housing market, which then translates right directly into lumber, of course. Next up is wheat. Wheat has pulled back to a nice support level. We had some divergence right here at that most recent high. You can see it right there, negative divergence. Then we broke a trend line right there, and that set off this correction that we've been in. But what's happened is we've been building divergence. Wheat and a lot of these ag commodities, they're clearly in bull markets. They bottom, they're up, many fold off the bottom over the last year or so. And so I'm viewing this as a healthy bull market correction. It's also been kind of consolidating in this range, but most importantly, it's simple. Let's not overthink this trade. This is a very nice support level. Look at all these pullbacks around to that 627-ish level that have contained wheat. Then recently we broke down below. You say, Randy, that's bearish, right? We broke support. It's bearish unless we recover. That's what's happened. So that means that was a false breakdown, aka bear trap, when you break support and then recover it. So as of now, we've recovered it. There's a pretty impulsive move today in wheat. So where I'm looking at is it's pretty simple. Take a long, put a stop below the recent lows, because if it fails, then the breakout, maybe this was the whipsaw and the breakdown's a real thing, and then we're going to go down more. Otherwise, you put a relatively tight stop. We've just snapped back above that 627 level, and I'd let it run all the way up here. You have trend lines that come into play. You probably have a reaction along the way at that trend line I just extended, and I could give you additional price targets, which I'll do right now, but at this point in time, maybe just trail stops up, let it run. But this is probably, if you want a quick trade, just a bounce trade right there, about 645 on wheat. That's ZW, by the way, wheat futures. The ETN, if you want to trade the ETN, if you don't do futures, WEAT. Just drop the H. And that's your symbol for the wheat ETN. All right, next up, let me find the next one. This is not a commodity, but it's in my watch. I have a bunch of charts up on futures, and that I watch. And this one I've updated quite a bit recently. Treasury bonds. This is ZN, the 10-year bond. As I pointed out, it's been building divergences. We have the long bond, or at least long-term yields, the 30-year yield at major resistance still, and has been for the last several weeks. And we just cracked above the downtrend line, or this bullish falling wedge. You have positive divergence here. Time frame I'm looking at is a 60-minute chart, 3 months of price history, And if we can build on this, you could take a shot here. I'm not crazy about the breakout because it's not very impulsive, but if we start to move up, so of course you could take a shot now. Some of you might already be in this. I mentioned it. We've had divergence building for the last few weeks. It's still intact. And this is still the minimum target right here, about 133, 233, with additional potential targets there should treasuries rally, and that's ZN. Let me show you ZB. Let me skip over. I don't have all these in order. Just take a look at ZB. ZB is the long bond, the 30-year. Actually, it's not the ultra bond futures. It's these are, I believe, in the 25-year range. They're long-term bonds, and that's what I usually trade. CB, get a little more bang for your buck than when trading the 10-year. But same story. You have positive divergence right there. It's been building, building, building. 30-year yields, long-term yields are at resistance, so they have been, all around here. This right here is a big level, 156, 144. So whereas I said on ZN, I'm not crazy about the breakout. It is there, but it's not impulsive. What I really think will spark a rally in treasuries if we can take out that 156, 144. Why? Because it would prove to be, at least on this time frame, a failed another bear trap whipsaw signal. You had reaction low, lots of reactions right there. We broke it, broke that support. Once support's broken, it becomes resistance. Failed, failed, failed on the back test, had a leg down. Now we're back there again. If we can pop it, then this whole thing here, this breakdown, becomes a bear trap, false breakdown. And that should spark a short covering rally in Treasury bonds, as well as some buyers coming in, I believe. So that's ZB, another idea. Next up, let's see. Talk on sugar. Sugar's, been building divergence, but it took it out. Sugar had a heck of a run. And that's why, like I said, a lot of these commodities got ahead of themselves, put in a divergent high here, and it's been correcting. It broke a pretty big support level there, about 0.1589. Broke it, back tested, it's headed lower. Do you short it here? It's not my kind of trade. Wish I would have been shorted here at the top. Or on this breakdown or on this back test, but I just wanted to point it out. I don't see any reason to step in and buy. Here's a case where it had divergence, but the divergence has now been burned through. So might be some more downside in sugar. Just wait for the next objective long entry. Where might that be? Again, I'd have to scrub the longer term charts, the daily time frame, and everything else, but I think we'll probably fall down to about here, somewhere in that range right there to about here. We'll call that a support / target zone. And I have gold on my future, so I'm going to update it. I've been bullish on gold, but I don't like this today. We had a little, I've added this since the last update, little symmetrical triangle, which we've just popped below today. So that means we've taken out this near-term uptrend line. It is not the end of the world for gold. It's not. Doesn't mean we're going to go down lower, but I should say, because we're still below or above the previous this major reaction low, and gold broke out of this small bullish falling wedge. More importantly, gold hit GLD, hit my long-term support. So there is still long-term support down here on gold, but as I went over, and I did an update on this the other day, we may run down, pierce down below that, and still have positive divergence in place, both on this 60-minute time frame we're looking at here, and then get the divergence that we didn't have on the GLD daily chart. Again, I just updated that, I think yesterday or the day before, so I don't want to spend a lot more time, but I did want to point this out because near term, that's not a good sign to see this trend line broken. So if we can get back above it, great. Oh, and if we do, what you want to see, if you're looking to go long, you'll want to see this downtrend line get taken out, and then you have resistance there or potential. Well, that target was already hit, 1757 right there. Here's Bitcoin. Again, not a commodity, but I have it on futures, BRR. That's what I like to track and trade on Bitcoin. It's a pretty big level there at about 52,980. Call it 53,000. Put in a divergent high here. We've been bouncing on it. So I think if that breaks, this is your minimum target, 45,477, and potentially all the way down here to 39,673. As I like to say, support is support until unless broken, so you have to respect that. You don't short right here, right above support, but if we do break support, then I think that's an objective short entry. And if you're a Bitcoin bull, you can certainly go long with a stop somewhat below that level, but with the divergence and everything I see there, I'd rather wait for the breakdown and do a short trade there. A quick update on copper futures. I gave you this setup a couple weeks back. I had a nice, well, no more question marks. The head and shoulders played out. I give you a head and shoulders pattern there. Left shoulder, head, right shoulder, neckline, and the first target there of 385.16, which was hit almost to the button. So we went. I mentioned this one is, when we see head and shoulders, it was given up here where you can short when you see the right shoulder starting to form like this with a stop above the top, and so that was a drop we were able to catch and bounce. But now I wanted to do an update because we've moved around into this trading range here. And I do think copper will break down and probably go continue lower. It's not a well-defined trading range. I'm going to keep an eye on it. I just want to do an update and let you know it's in this trading range, and most likely we're going to probably see some downside resolution of that range, and then possibly come down here to that 374-ish target right there on a copper futures HG. Next up would be, did I cover this one? Uh, don't believe I have. This one I'm liking, especially on the longer term chart. I don't have the long term chart up here. This is a 6-month, 2-hour chart, 2-hour candles, but we broke this trend line here, and we did so after a big divergent high. Soybeans I was very bullish on about a year or so ago, right off the bottom. Caught that, able to catch a lot of the upside on soybeans, but now at this point in time, I'm looking for a pretty good correction. And what I think it's going to take is we've broken down. It's not been impulsive. We've been moving sideways. So if you can get a back test of the trend line, that would be an objective short. Or I think the dam will break when we take out about 1384 right there, and there's your targets: 1329 or 1339, call it 1340, then 1300 right there. Let's just target this. Let's just say this is my preferred swing target right now. Again, this is in a primary bull market. I'm just looking for a correction, a counter trend trade, so that would be a pullback to about that 1300 level. From where we're at right now, that'd be about a 9, almost 10% drop in soybeans. And here's crude oil. Crude oil, we hit my second and final near-term target, but I laid out some longer-term targets if that level goes. And again, when we hit it, it was a swift move down. We had a brief, slight momentum-fueled overshoot. You can see right there, right to the bottom of my T2 zone. Bounced right back up there, and we're back there again. We hit it today at least, and we're holding on it. Now look, there's almost divergence. If we had made an equal low, we're close enough. It was a slightly higher low than this previous reaction low, but big the indicators are making much higher highs. So that could be it for crude oil. Certainly could be. I'm leaning towards, but let me just say it's a setup. You don't short right above resistance. So if you're looking or you're already short, set a stop above that recent reaction high. That's where we should, quote unquote, should stop. There's a potential. Here's a downtrend line I could draw there as well. So that would be, this is the maximum stop right there, 63.76. We may go up there and then take another leg down on crude, or your objective entry, so you can wait and short a rally back to any of those resistance levels I just gave you right there, or wait for a break below the recent lows, and that should open the door, if we get it, to these additional targets that I gave you on the 2-hour time frame. That's the 120-minute candles. Goes back, next target 57.25, then about 53.85 or so, and potentially all the way down to 51.80. Remember, these are unadjusted price targets, actual resistance levels where a reaction is likely. Since the buyers sometimes step in early, you may want to either take profits early, or what I like to do sometimes, especially when you get waterfall sell-offs like this, just trail a stop down, set a tight trailing stop, because when you're in waterfall mode, that usually you don't get snapback rallies. Once that trend is over, in this case you overshot, so a tight stop, a 1% or so stop would have took you out right about there, on or below that first target. However, if we smashed on through there and kept going, it would have kept you short in the trade. So that's one way to trade when you see especially a swift move down. And crude tends to do that. It tends to be a overcrowded trade, then you get a rush for the exits like that. So that's one to watch. And of course, the energy stocks, I'm not going to go off task on this video, but if crude does take that other leg down, then there's probably going to be almost certainly more downside on XLE, XOP, and XES, the 3 energy ETFs that I've mentioned recently. And then last but not least, I covered Wheat earlier showed you that potentially bullish development today. The recovery of the recently broken support. And here's corn. Corn and wheat usually, often, not always, but often move together. And this corn has been in this trading range for a while now. We had one little false breakout there, and it's a breakout, that ended with a divergent high, and we had a correction. We even broke this uptrend line. But what happened? Corn and wheat, they've been in strong bull markets. These grains have been, soybeans as well. And so this correction off that divergent high right here, back in February. Here's the dates down here. So that was early February. It's been a correction more so in time than in price. I always say stocks or securities. In this case, it's not a stock; it's a commodity, but they're all securities. Securities are anything you can trade. They can correct in one of two ways. They can correct in price or in time. And that's what this one certainly did here. So where I'm going is we're in that pretty well-defined level right there, 558. A pop above it would be bullish and quite likely open the door for the next leg up. Whereas if we get rejected here, a move down to the 528 level. The fact that wheat has recovered that level steers me towards this scenario, but I can say this right now. I like wheat. I went long wheat today, right before the video, and on this one I'm holding off on corn because we're at resistance. In fact, I may even decide to short corn as sort of a hedge in case we do get a rejection here and we go down. But as of now, I'm just, like I said, I don't have a position in corn. I did want to point the levels out. And again, you could take a shot at a short trade here. And I'll give you one other level before I wrap this video up. Right there, I see some minor support right here, just below the recent lows. Let me zoom in a little bit. I know it's sometimes hard to see these in the video. There it is. There's the minor support. There's the top of the range, about 558. Call it 560 if you want to be safe. Okay, I'm going to wrap it up here. I'm a little stuffy. I have allergies of 20 minutes of talking. That's about all I feel up for today. And again, I'll cover, if any of these really stand out, I'm going to pour through some of the charts, so the longer term charts of the futures, as well as those of the commodity ETNs. And I'll follow up with any that really stand out. But at least there's a few potential trade ideas in here for you today. And anything big happens on the stock market, I'll do another update soon. This has been Randy Finney with Right Side of the Chart. Have a great day.